And my next guest says, buckle up. Markets are going to be choppy for a while. Joining me is Jason Brady. He is CEO and co-portfolio manager at Thornburg Investment Management. Welcome, Jason. How choppy?
Well, look, we'll see tomorrow a little bit, right? The Fed tapers a little bit faster than the market currently expects, and you continue to get some flattening in the yield curve. A lot of the market leadership that we've seen over the course of the last year or so has much more shaky foundation. So I heard in the last hour a lot of commentary around dividends, valuations. I didn't think that was a 2021 conversation, but I think it is going to be a 2022 conversation.
All right, wait a second, because I think you're throwing some shade here. Tell me what bone you want to pick about dividends.
Oh, no, the opposite. I think actually focus on cash flow and dividends has really been something that's been missing from the conversation. And as I heard some of the folks in the last hour talk about their names, they weren't talking about GameStop going down 14 and up 4. They were talking about, much more basic blocking and tackling cash flow businesses. And that is absolutely where I think, and we think, investors should focus given the coming volatility.
We teased that you have 4 specific plays. These look like specific names. Walk us through them. A couple, Visa, JP Morgan jump out to me, although, each one of these we could talk for a long time about. Tencent is on here. What's Total Energies?
So Total is a French-based international oil company.
Total, gotcha. Yes, go ahead.
It's an underappreciated ESG story, actually, given the transition that's going to have to happen through natural gas. They're a big natural gas producer. From a valuation perspective, obviously, good valuation, about 12 times today. 6% dividend yield, and obviously something that has some protection, at least in the medium term, from inflation. So good valuation, obviously good cash flow. The entire energy complex is focused much more on cash flow, and I think that shows up here in this name.
What about Visa and JPM? I'm lumping them together, but really Visa has a lot more particular headwinds it's been dealing with.
Sure. So you think about all of these names together. For us, a lot of what we're thinking about at Thornburg is portfolio construction and balance. If you go totally to one side, to the other side, you end up with an imbalanced portfolio. So some element of growth and paying for growth, that would be Visa. And now Visa is expensive on a PE basis, but obviously it's had a much tougher year. We think that the playbook for fintech is not so much to take over from Visa, but ultimately to be subsumed by Visa and their ilk. It's a really valuable network. So that's one side. Also financial, but totally different business model, obviously. JP Morgan, you're going to see slowing earnings in 2022 because of less reserve releases, but this is absolutely a benefit from higher Fed.